Our founding fathers were literally thinking generationally. And that ability to think long term, there's a reason, as when we said when we started this episode, 249 years of kicking ass and taking names. That's because they set an intent that was sustainable over time, right? Because they had the ability to think long term.
Our country is about to be 249 years old. That's wild and so cool. Today, Jeremy and I are here to celebrate and reflect with you on the original intent of our founding fathers and how they might feel if they were still around to see our state of affairs today. How many of you feel like the American dream has slowly shifted from ownership to obligation? And how many of you are earning more than ever, but feel more fragile than ever before? So, welcome to another episode of our WealthWise Banking. If you're here, it means that you are not content with the status quo. You're ready to lead, not just in income, but in identity. And Jeremy and I want to commend you because that's exactly the kind of spirit this country was built on. So, I'm super stoked about this episode, Jeremy. Let's tell our good builders what we're here to talk about today.
Yeah, so I'm really excited about this episode as well, Jason, and a great lead in here. A couple of things that we're going to discuss in today's episode is why the Declaration of Independence included, very specifically, the pursuit of happiness. And what does that mean, the pursuit of happiness? What does that mean for you financially? We're going to discuss how Benjamin Franklin created America's very first fire and life insurance systems and why mutually owned systems still outperform market-based financial systems today. And one of my favorite things that we're going to discuss here is how mutually owned life insurance companies create guarantees for liquidity, legacy, and leadership. So, with that, let's get into today's episode, Jason.
Well, first, we're here to celebrate, right? We're talking about what do we want to do for the 249th anniversary of our country, of this great country. And before the show, what were you saying about America, Jeremy?
So, we've got 249 years of kicking ass and taking names.
That's it. Kicking ass, taking names. I mean, I like that for our builders out there. And that's what we're all doing on a week to week basis. That's why you're here. Again, congratulate yourself. Pat yourself on the back if you're listening in. But let's talk about one of the old OGs of kicking ass and taking names, Ben Franklin. We know him as an inventor. We know him as someone who was integral in signing the Declaration of Independence. And what we don't maybe know about Ben is that he had a vision for a mutual society. And it started in 1752 with what he called the Philadelphia Contributionship, which was the first mutual fire insurance. Actually, it might have been the first mutual insurance. And that was over 272 years ago, Jeremy. So before we were even a country. That's pretty wild. And so from that was born, and it's always solving someone's problem. I'm sure back then, right? Everything's made out of wood, things are burning down. You have to protect the society, protect the community. And that's when they came up, well, how do we share the risk? And then in a few years later, Ben Franklin actually started the first mutual whole life or life insurance system with the Presbyterian Fund for ministers. And that was in 1759. And so when he started that, it was to protect, the priest. It was to protect the families. It was to protect those who were preaching the good word and doing good in society. And so it was a shared responsibility because that mutual ownership gave us shared responsibility. And I just think when I look and when I think about I always think, what would our founding fathers think, Jeremy, about now? And so maybe talk a little bit more about, why Ben Franklin's thoughts on creating mutual institutions were so revolutionary.
Well, I mean, as we're talking about what is mutual, right? It's for the benefit of all. It's built on cooperation. It's not built on speculation. And I think about going all the way back to when our country was these segregated, not the United States, right? But we were all our own independent states at that point. We weren't working for the mutual benefit of this country. And so I'm starting to see a little bit of this idea of mutualism that Ben Franklin had literally go into helping form the United States of America, right? The people who contributed to this and to these mutual companies, they're all looking out for each other's benefits. And that's a radical shift from what we look at today, right? Today, we're more of a shareholder model. And when we look at the companies that we have with the insurance carriers, you have mutual companies, the ones that we want to partner with. And then you have stock companies, the ones who are there thinking about the next quarter. They're not thinking long term. And as we talk about a common theme over and over again, we're always talking about thinking long term. And when you think about these founding fathers, gentlemen like Benjamin Franklin, trying to establish a country that's going to last for generations, the one that needed to be collectively for the benefit of everyone, right? That's mutual. It's for the mutual benefit of everyone. So he was thinking long term in the creation of the nation, but also it started like what you just said. It started back in, what was it, 270 something years ago with literally a fire. Like just, hey, everything's made out of wood, everything's made out of a thatched roof. If this burns, how about we collectively, get together and help one another? And I think that's really cool when you sit back and you kind of think about it.
Yeah, the cost of think about the cost of rebuilding or maybe how much, things cost back then. I mean, it's similar to probably what it is today. I mean, we got inflation changes and all the monetary things have happened over the last 200 and, 50 plus years. But at the same time, the whole idea was, well, hey, if we all put in just a little bit, if, our neighbor 4 block or 4 houses down burns down, and they would have a heck of a time getting back on their feet. But if we share that burden, right, law of large numbers, and we're all protected, and we pay a very little amount to make sure that our family's protected, to make sure that we're taking care of each other. And like you said, it's a kind of a novel idea today, because today we're very much, I don't know, I feel like we're more dependent or more looking for marketing is the leader, right? Marketing, quick returns. We're always looking on a day-to-day basis about what's happening in the market, what's happening here. And we've been groomed that way too, right? We've been groomed, and it's become a little bit of a trap, even for us for high performers that are out there. A
Yeah.
lot of them make great money, but the systems today, and we were joking around, like maybe Ben Franklin, maybe the other founding fathers would kind of be rolling around in their graves if they saw what was going on. But it's been slow. We talk about a lot, like why things are the way they are today, why people still feel, the number one word that describes money is fear around families, right? The number one thing that has couples or, leads to strife in the family with the husband and the wife is also fear. And it's fear with money. And so when you're earning well, you still might feel vulnerable. You might feel like don't have control because everything's been outsourced to someone else.
Oh yeah, I think we discussed that previously, haven't we? We discussed the delegation of wealth, right? No one's going to take care of you better than you take care of yourself. No one has your best interest in mind better than you, not me, not Jason, right? So why would you delegate your finances to someone else? Why give that ownership away to someone else? And what's interesting here is we're talking about mutual benefit for society, right? This isn't socialism where you're forced into benefit society. Like what we're talking about is everyone coming together with the shared belief system, the pursuit of happiness, the pursuit of safety, this pursuit of security, and collectively coming together for the greater good of everyone else involved. And that's what you're talking about with the shared risk, right? Because at the end of the day, that's what insurance really is, right? It's sharing risk with other people. Sometimes that's mandatory by a bank. If you go out and get a bank loan and a mortgage, they're going to have mandated share your risk by getting homeowners insurance. Vehicles, right? It's mandated that you share risk with all the other drivers on the road. But when it comes
Let's
down
pause
to
there
life,
for let's pause there for a second. You said something that's
yeah,
really interesting, and I don't know if you were thinking this or intentionally setting this up, but you're talking about if then scenarios. And not to take us off track to, be here, celebrate 249 years and Ben Franklin and mutual societies, but everything you just talked about is because someone else actually owns that asset. The banks own the home, the banks own the car. So all it is the banks protecting their asset. And, we think because we have to get it because we don't fully own the vehicle when we're doing the borrower walk or whatever we want to call it, right? Borrower actions. So you're doing the if then, if my get in an accident, then something will be replaced, like of equal value, right? But we're like you said, you can't have those things without having that kind of insurance on it. So it's really benefiting the people that own the system. And what we're saying is we want you to own the system. We want you to see in a mutual society that you are the one that is able to decide that you're going to put money into a system that you control, that you have guarantees, and that is protecting you in a mutual way with other owners.
Yeah, it's voluntary, right? Like you don't have to do this part. What's interesting though is that this is the one thing that is guaranteed, but the way that we structure it is to live today, secure tomorrow. So that way we maximize the living benefits of, and that's truly what infinite banking is. It's not the product is great. Like we like the product. We do believe that you should have the product. If for nothing else, then the reasons we discussed in previous episodes, right? Income protection, right? Income replacement, actually stepping up and being the leader, the financial leader in your household. But when we're looking at the living benefits, like the way that we can maximize these because this product predates IRS tax laws, there's so many other things that you can do with this, especially giving yourself back that control, right? And you're doing it collectively. That's what I think is really neat. You're getting control, but you're also helping other people take that control, right? So by helping collectively, mutually, everyone's moving together towards a shared common goal that benefits you, the individual, as well. It's kind of a weird, novel. I don't know. For some reason, I think of an ant colony a little bit, right? Every single person's working, but they're working for the greater good of the colony. And that's what we're doing as well. We're working for the greater good of the colony, but everything that we do also benefits us in the process.
And some big giant comes and kicks over your ant pile. And, oh man, we gotta start all over again and build. I that's the first thing I thought. There's a comedian that has a whole episode like just go back to work and just keep working. And there's I think the novel part of it, and I'm with you. I'm with where you're going with this. The novel part is that we're not used to the fact that we're working together towards something by being ownership or part of a certain community, and especially when it comes to financial vehicles. Most other financial vehicles, you're just hoping and praying, you're putting money in, you're hoping it's going to grow, you're hoping things are going to go your way. There's a lot of, again, fear and worry and lack of understanding of what's really happening. And that's because, again, it's not for the benefit of those workers, right? Like the things that have been set up over time since our founding fathers, since Ben Franklin came up with this mutual idea that's carried on for hundreds of years. And like you said, it's older than anything that we know. The IRS, the Federal Reserve, our current financial system is younger than everything we're talking about here. So to bring it back to the novelty of how weird is it to think that we could all do something where everyone thrives? If you want to go faster, you go alone. If you want to go further, you go together. And now we're saying, hey, this is a way you go together where you actually have control and ownership. And that was the intent of our original founding fathers.
Yeah, I think it's a beautiful concept of it, right? Because all those states, before they were the United States, they were independents, right? They had their own governments. They had their own currencies, Jason, their own currency, right? They weren't, I mean, they were all state militias. There was not a unified military. And it wasn't until that mutual idea of, hey, if we truly want our independence from the sovereign king over there, that we have to come together and collectively, for the betterment of everyone on this side of the pond, come together and defend our freedoms.
And what we're talking about still exists, right? We're celebrating something that's over 200 years old. We're celebrating something all the mutual companies that we partner with allow people to have these contracts, and they're still around and they're still the backbone of our financial system. But somehow we're not aware of them. Somehow the name whole life insurance got a bad name. You and I were talking the other day and said, why don't we just, we ran this by some of the executives of some of the big mutual companies and say, well, what if we just called it whole life income? That's what we're helping people do because we're focused on the living benefits. And that takes away the stigma of insurance that you need to have. And it's supposed to be as cheap as possible and all these other things. So, let's talk a little bit about how, this mutuality still exists, but why aren't more people aware of it? Why don't more
Yeah,
people specifically know about this?
Oh, it's not sexy, Jason. It's not Bitcoin.
Ti-
It's not, the skyscraper. It's not the yacht. It's not, there's nothing sexy about it. But that also gets me back thinking to some of the principles by Warren Buffett, right? You know, when I read through a lot of the things that he invests in, one, he invests in things that he knows, right? He stays within his knowledge base. The other thing is a lot of things that he invests in are kind of boring, right? He doesn't invest in sexy, he invests in security. He invests in growth.
Do you think
Like,
anybody's ever accused Warren Buffett of being sexy?
I don't know if anyone's ever accused him. I think there are
I was
things.
thinking that we're pretty sexy, Jeremy. I know people maybe can't see us or is hearing us, but I was saying as soon as you said that, I was thinking, I feel sexy. There's pretty sexy things we do. I don't know why you're saying what we do is kind of boring. Like, who wants to talk about whole life insurance that's specially engineered for you to do all the things you want to do? That sounds really exciting. That's not
I'm just
boring.
saying there's a movie called Wolf of Wall Street for a reason, right? Like there's a whole flashy movie about the fast-paced lifestyle out there living, I guess living kind of in that quarter to quarter, or for some folks it's day to day.
Day to
And
day, hour to hour, hour to hour, day to day, week to week, month to month. And it's the programming of the ones that are going to stay stuck there. Like you're talking about Warren Buffett. We either learn how to make our money work while we're sleeping, or we will work until we die.
yeah. Well, I just kind of had a thought of why is it that we get stuck in that day to day, right? Part of it is we're just fed so much information from this little screen that sits in our pocket or the screen that we look at when we come home from looking at the other screen that helped us make money, right? We're just constantly fed this information over and over again. I don't think that we really have the opportunity to just sit with our own thoughts, reflect. I would say part of the ability to think long term is to just pause and reflect about where you're going in life. I mean, just look at where you are today. I'm 38. I'll be 39 this year. I
Holy
don't
cow.
know where the last 38 years of my life went. Like it just went just like that. I'm coming up. I was like, man, I got a high school reunion coming up. I was like, another one? It's like it really has been that long. Like my 20-year high school reunion is like this year. It's like I've been out of high school for 20 years, but I haven't taken that opportunity to really think about the next 20 years of my life, right?
Mm.
And that's what we're asking you to do. We're saying, hey, take a moment, like not necessarily after this podcast, but schedule time in your busy
No,
calendar.
right now. Right now, just stop listening. Go take, no, just kidding, kidding. Take a moment. Like, go ahead, Jeremy, back to you.
Yeah, just take a moment for yourself. And like, what's the next year, 3 years, 5 years? Let's just start small. Like, let's not think about grandkids and legacy. We talk a lot about legacy, but let's just plan the next year of our life. What's the next year of your life going to be? Are you going to keep doing the same things of that you've been doing habitually over time? And I'll tell you, if you're discontent with your current financial situation, and you keep doing the same things over the next year, 1 year from now, you're going to be exactly where you were, right? You have to
Mm.
disrupt it. And part of that is literally stopping, pausing, and thinking. Like just take a moment. I mean, 15 minutes. I mean, you got 15 minutes that you're going to scroll on TikTok. So take that, maybe put it down and just think about the next 15 minutes of the next year of your life in that 15-minute period.
Now, how many of you commit in this moment? I like action. I like picking a date, pad. So right now in this moment, pick a date. And when's a better time than now? But pick a date and email Jeremy and I at our WealthWise Banking account and tell us when you're gonna sit and reflect, when you're going to, what you're gonna think about, what your goals are. Because Jeremy, this is you and I. I actually sent you a voice note yesterday on this. I asked you to be my accountability partner to really tighten up what the big vision was for the impact we're looking to make, for what we're looking to do for not only for our families, but for all the families we serve. And so I walked right before this. We bought a series of books for Connor from the Tuttle twins.
Yeah,
Yes.
Tuttle Twins. I bought that for my business partner, actually.
Yeah.
Um,
So I was just reading the one about the creature of Jekyll Island before our call. And so I was loving it. Didn't want to put it down. Almost didn't even come to this episode because I was going to keep reading the book. But in the mailbox, the other thing in the mailbox, I had 14 pieces of mail. And 9 of them were offers for different financial things, for loans, $100,000 plus at this low interest rate, credit cards, come back to us and open a credit card again, all these things. And I was like, wow. And Patty's like, oh, Connor likes opening the flashy ones, like the Amex ones, and the ones that are really fancy because like, wow, this is VIP service. Just to go back into your point of why we're stuck in a month, because it's always there. It's always present, whether it's in our pocket, on our screen, on our computer, in your mailbox, on the radio when you're driving. You cannot go anywhere without hearing someone offering you money for cheap.
Yeah. Well, I mean, we're talking about thinking long term right now. And for us, what we're defining as long term currently in this present moment is the next year. But our founding fathers were literally thinking generationally, right? And that ability to think long term, there's a reason, as when we said when we started this episode, 249 years of kicking ass and taking names. That's because they set an intent that was sustainable over time, right? Because they had the ability to think long term. And so, if you want to just model yourself as a person who literally can change destinies, right? To have the power. I mean, look, I don't, I know that there's like different opinions on where our nation's at and where our nation is going, but as someone who has gone to multiple battles, positions, like I've had 4 combat rotations, and I will tell you, between 4 combat rotations and over 30 something countries visited, my favorite one is always coming home. It's
Mm,
every time I go away to another nation, do I realize how great we actually have it here. I mean, how awesome is it to be born? I mean, it's like hitting the lotto. People out there playing the lottery. Guess what? If you're an American citizen, you were born in this country, you already hit the lotto, like hands down. I mean, I love traveling abroad because it makes me feel so great when I come home. And I feel so patriotic. Like, yes, I feel a little bit refreshed. I might have a little bit of tan, but at the end of the day, I'm home. And I love that. And I wouldn't be here and I wouldn't have, worn that flag on my shoulder, and I wouldn't have volunteered to do the things that I have, as a soldier, as a leader, had it not been for the forethought of our founding fathers to
mm.
give us a reason to fight, right?
Thank you for your service. Thank you for sharing, especially, the story of being that well traveled, 30 plus countries, coming home and always being grateful and humbled by how great we have. And I know a lot of friends and we have peers and people in our community who have come here just to have their kids so they could be born an American citizen. Like even if they weren't citizens yet. Right. So it is like winning the lottery, like you said. And the thing that to circle back around, I'll kick it back to you, is we're talking about rethinking your thinking. We're talking about taking pause and thinking. Thinking is the hardest thing. Almost everybody, we talked about this in another episode, but if you put people in a room that they had to sit there and think, or they could press a button and be shocked with an electric shock that wasn't comfortable, almost everybody chose to be shocked constantly versus sitting there with their own thoughts. It's wild how our psychology is just geared to not stop and think, and it's the hardest thing to do. So if you do stop and think today, thank your creator for it, for the time, for the space, for the moment, and appreciate yourself. Just think how rare you are and how you're in the small percentage. Like anyone listening to this is in a small percentage of builders out there really looking for a better path forward. And so it all starts with that thinking, that long-term thinking. I think that it's been going for over 249 years, actually 272 years since the idea of first mutual insurance in North America. That's wild. Like, imagine having a thought and an idea that was so based in truth that it's carried on for that many years.
Yeah. And I think that we're just getting started, right? So our world is becoming smaller. It is becoming more connected through things like a podcast, through the internet, through artificial intelligence. But that doesn't mean that we also outsource our thinking, right? Too many people have already delegated and outsourced their finances. If you want to maintain your freedom, you have to retain control of your ability to think. Do not outsource your thinking, because the moment you do that, you have truly become a slave, right? And that's what we want to preserve. We want to preserve freedom. We want to preserve the pursuit of happiness, right? What does happiness mean to you? No one's going to achieve it. I cannot achieve happiness for you. Jason
Mhm.
can't do that. So understand what makes you happy, think about those things that make you happy, and then plan and pursue that. Okay.
And give yourself permission to do that. And if you haven't gotten there, you just haven't gotten there yet. So the legacy we're talking about, again, for you, it's about your thinking. If you can disrupt a thought pattern that's been generations long, that you're going to go show up first, leave last, work hard, be humble, and really just be the best worker you can be, then you already know if you're giving your finances over to someone else to manage it, they're not going to care as much as you. We talk about it. They do not care about your money. All they want is to be able to have your money under management because they have a pretty comfy lifestyle off of that. Same with the banks and Wall Street. And what's been set up isn't so much mutual anymore. It's market, like we talked about. It's marketing. It is, how do we get the people that are going and earning money to give us their money so we can make more money? And all we're saying is to have that legacy, to disrupt that pattern, you need the pathway, right? You don't need a windfall, you need a framework.
That's really good. I like that. You don't need a windfall, you need a framework. I really like that.
Thank you. The death benefit, because we're talking about whole life insurance, can be misunderstood because it's not about the money. Again, it's about the continuation. It's about the lessons. It's about what we're talking about with your thinking and where are you going. We talk about all the time, if you're trying to go to California and you start driving north, if you live on the East Coast, you're not going to ever get there. Pretty ridiculous. I mean, you could keep going north and north and north, and you're never going to get to California because you don't have a direction. You don't know where you're going to go. So have that idea of where you're going to go, and then find people who want to support you and want to have you part of that journey. And that's the mutual people, not just us, the mutual folks.
Yeah. Yeah, I really like that. And, as we start to close things out here, if you do want to learn more about the difference between stock and mutual companies, our episode 16, right, actually talks all about the benefits and the reasons why we prefer mutual carriers. A lot of these companies that we work with have been around for over 150 years, actually, right? So you think about that ability to think generationally, right? And if we want to partner with those sort of companies, we want to partner with companies that are thinking long term, the ones who are already considering your kids and your grandkids and the future status of that, not the ones who are thinking in quarters. So again, episode 16, fantastic episode for you to go and listen to right after this if you need something else to do. But I do encourage you at some point, schedule a busy time in your calendar to just pause, reflect, think long term. What does happiness mean to you? Where do you want to be 1 year from now? Do you want to keep making the same decisions that got you to where you are today? And if you're successful and you're on that path, awesome, keep doing that. But if you have discontent in your present and you're not where you want to be, take a moment to pause, figure out where you want to go, right? And then the path to get there, I guarantee you the highway's already been built. You just got to get off that exit, right? And start traveling in that direction. And if you need help and more guidance, myself, Jason, we're here to help. You can go to wealthwisebanking.com. We have additional episodes for you to listen to. But just know we're in this for the mutual benefit of everyone. You're not alone.
Thank you, Jeremy. To recap what Jeremy just said, go ahead, get off the exit ramp. If you keep doing what you're doing today, you're probably not going to arrive where you want to go. So go learn more, go to wealthwisebanking.com, book a strategy session with Jeremy or myself, and come with your questions. Go use that time to reflect and pause to write your questions to see where you want to go, and then keep learning about this. Go to episode 16, go to other episodes, but go schedule a call. And if you're not ready, that's cool too. That's cool too. Because Jeremy, we already know that we are all already in banking.
You're just not the banker yet.
There you go. Be blessed, y'all. Happy anniversary of our country. 249, 250 is coming up next year.
God bless America.
God bless America. Keep kicking ass and taking names. Thanks for joining us on WealthWise Banking. If today's episode inspired you, please subscribe, leave a review, and give us a like. It's a simple way to help others discover these empowering strategies and join our community. Together, we're building a network of people who believe financial freedom is within everyone's reach. Remember, financial independence is about making every dollar work for you, one step at a time. Until next time, stay inspired, stay in control, and keep building your legacy the wise way.